Welcome to FinTech Hustle. My co-host Ron Shevlin and I are glad to host you today, and thanks for joining us. And we should have a nice, lively discussion here over the next hour or so. Want to cover a few housekeeping items before I introduce you to our guests today and talk a little bit about what we're going to talk about. For starters, again, welcome. Glad you could join us. Just to let you know, we do record this session, these sessions that we do with the FinTech Hustle, and you can request it at the end of the session today. There'll be a little poll that comes up that I ask you if you are interested in the recording. You can get that, and you'll also have an opportunity that if you want to follow up and talk with somebody from Ron or I or somebody from Cornerstone after the session, you can do that. Just so that you know, you will be muted. Your mics will be muted mainly for background noise. It's not because we don't want to hear from you. We do. We have to do that for background noise. You can use the Q&A and you can use the chat feature at the bottom of your Zoom window to ask any questions. Don't wait till the end. Certainly, if you have questions for any of the panelists or for us in general or whatever, just go ahead and shout those out during the session, but be sure to write them in there. Don't shout them out literally because your mic is muted. It's a 1 hour session today, so we're going to wrap up in not very long from now. The time will fly by, and so let me, on behalf of both Ron and me, let me introduce our guests that we have for you today. Our first guest is Trisha Price, who's the Chief Product Officer of nCino, and Trisha and I met several years ago at an nCino conference where she was giving a product roadmap session. Very high energy, lots of insights, and keeping the crowd of 1,000 some odd lenders and others in the banking world entertained as well as informed. And Trisha actually, prior to nCino, actually spent some time with Primatics as well as Fannie Mae, and comes with a real deep tech and banking background. So welcome, Trisha.
Thanks, Sam. Thanks for having me.
You betcha. And our other guest is Wade Arnold. Wade is the CEO and founder of Moov, or co-founder, I think, of Moov, which is an open source infrastructure company. And prior to Moov, Wade, very well known, like Trisha in the industry, spent some years at Bilgo, I think, as an investor as well as a technology consultant, a well-known founder of Banno, and through to the Jack Henry Associates through that acquisition. And I met Wade at an AFT conference. I know, Wade, you've been very involved in the Association for Financial Technology. I'm a personal I've got a crush on AFT, so I'll just throw that bias out there right away. And love the conversations that we've always had on all kinds of things. So welcome, Wade.
Hey, thanks, Sam. Appreciate being here.
You betcha. And of course, our snarketer in chief co-host, Ron Shevlin. Hello, Ron. How are things up in Boston?
Rainy, but all good. We need the water, so we'll take it.
Take it indeed. So let's just jump right in, guys. We've said the things that we want to cover on these sessions. First of all, we want it to be informal. This is not scripted. We want it to be, very real time. But one of the things we just kind of want to get into is what's working and what's not working in the land where fintech and bank tech and all those worlds kind of come together, and what's working and what's not working. Why don't we just kind of start with what's the mood out there? What are we hearing from bankers and from those of your teams that are working with bankers in the world between fintech and banks? What are they saying? What are they saying about their plans for spend? I mean, just what's the overall tone? Is it getting more positive out there? Trisha, you want to kick us off with any thoughts of what you're hearing from the nCino team and your clients out there in Bankland?
Sure. I mean, I think for some portion of our customers, when the PPP program came out, they were pretty buried there. And so they didn't really have time to be happy or sad. They were just pretty overwhelmed with trying to do the right thing for small businesses across America. I think most of them, still somewhat buried in that as it relates to forgiveness, but most of them have been able to pick up their head from that and just start thinking about the future. And, what we hear most is I mean, Sam, you know that there's been a focus on digital transformation internal at the bank, as well as how banks are able to engage with their customers for several years now. But that feels much more timely and important now than maybe it did a few months ago, where, hey, we'd like to do this, we'll dabble, maybe we'll put a portal up here or there. Now it's, oh my gosh, we have to actually have these processes in the cloud. We have to be able to allow all employees to work from home. And we've got to be able to do things like open up deposit accounts without somebody walking in a branch. So definitely kind of themes that we've all been thinking about and talking about for a while seem much more important today. And then on the flip side, when you think about credit risk, portfolio management, modifications, forbearance, obviously top of mind for people, and thinking about that piece of the puzzle as well.
So no, my takeaway from that is no more dabbling in banking, right? Thou shalt not dabble in digital. We have to get real.
You got to get real. You got to get real. Digital transformation light isn't helpful during a pandemic.
Right. Pandemic light. What about you, Wade? What are you hearing and seeing and feeling the pulse of out there in bank and fintech land?
Yeah, I think we're seeing a big transformation from a year ago in that financial institutions were assuming that interest rates were going to increase, right? So we're going to be more profitable just staying in business for another year. I think the budgetary constraints around interest rates going back down and no interest rate change in the foreseeable future is really driving tons of interest around, what ways can I have non-interest income? How can I do that in a way that doesn't generate huge fees that may be considered predatory, but ways that I can offset some of that revenue in the non-interest income side of things. Also, tons of push into what it's going to look like to diversify my deposits. So as I'm looking at different ways of increasing the deposit side of my balance sheet, how am I going to do that in a way that's not concentrated on walk-in efforts, right? So if account creation is always through the branch, really a lot of insight around how can I distribute that workload to different channels.
Interesting. I think one of the things I heard you say, non-interest income, and just kind of a heightened focus on earnings. I was talking to a CEO the other day that was just talking about just the impact of all the money that they've had to plow into their reserves, right? Kind of waiting for the bad loans, and in their case, the bad loans that essentially have not come, have not developed, have not materialized. But it's almost like it's like, what do we have? It's hard to remember this. Like we're at 7 or 8% unemployment right now. It was at 15% in April. So we've improved, and it's improved better than I think many of us have expected. But we're nowhere near where we obviously were. But interesting that you mentioned, Wade, about just thinking through non-interest income. I think, Ron, I was thinking about some of the conversations that we have with Brandy and Tony from our payments practice about, interchange impact, and because that's the kind of income that the non-interest income, some of that bankers get that doesn't feel like punishment to the consumer.
You normally see it in treasury management services, right? You see it in debit or card services, areas where, call it out, specifically want non-interest income that's not overdraft fees.
Yeah, Treasury's been hot. I mean, it seems like, and that was before COVID. I mean, everybody was sort of talking about how do we become a more commercial bank, that we're not just all CRE and many of the banks out there. And Trisha, I know you guys are in Treasury origination.
We are. We're in the treasury management onboarding origination process. And we started down that path, Sam, because our sort of origins in commercial lending. And as you start to think about an overall deal and a relationship manager selling a deal, the treasury services were a nice bundle in the deal, and it made sense to be in the commercial lending system. But you're right, Sam, as opposed to just a part of the deal in the commercial lending system, we definitely saw a trend probably starting a couple of years ago around a bigger focus on the treasury management onboarding side. And I think to Wade's point, the complexity of product catalogs really exploding there and needing better systems to bundle those products the right way to deal with pricing pro formas and just sort of the complexity and workflow of those onboarding processes.
There's still some big hurdles there. And just to kind of address that point, it was interesting on Twitter about a week ago, maybe 2 weeks ago at the most. It couldn't have been more than 2 weeks ago because I wouldn't have remembered it otherwise, because who can remember anything that happened more than 2 weeks ago? But there was this discussion about, treasury management and getting more, revenue from that. And there were a bunch of folks proposing that, well, banks should, basically, force or enforce a policy whereby you couldn't do commercial loan unless you had some sort of, treasury business along with it. And I just kept sitting there thinking, it's like, yeah, you go tell the commercial lenders they can't do business unless you're bringing in the treasury side. That's not going to fly. And, that kind of addresses sort of the whole cultural aspect. I wanted to go back to the digital transformation points because, all this talk about how digital transformation has been accelerated in 3 to 4 months, I think is a kind of a misperception of what's really going on. We saw and we are seeing digital adoption acceleration, not necessarily digital transformation. I surveyed a bunch of financial services executives last year, asked them what digital transformation was. And the most popular answer included the concept of cultural transformation. And there's just no way the cultures have been transformed in 4 to 5 months with people running around with, like chickens with their heads cut off trying to solve problems. So I think we're a long way off from, this notion of digital transformation. And, I'd also put out there that I don't think we're going to achieve digital transformation until we see broader, legacy core replacements. Wade, you can talk to some of the, challenges associated with that and, whether that's really kind of happening or not. But, I'd kind of put out there that we haven't really achieved transformation as an industry until we see greater core legacy replacement.
Nice throwdown. Wade or Trisha, any reactions to that?
Oh, I bet we both have plenty of reactions. Wade, you want to go first? I've got a few.
Yeah, go ahead. Jump in.
For me, I think that, Ron, I think that's a nice nuance that you pointed out around digital adoption versus digital transformation, right? You think about, I talked about PPP as an example, and we saw 3 years of loan applications in the digital channel worth of volume for a particular customer in a day, right? Sometimes in an hour, right? And so, but Ron, to your point, those tools didn't come out of nowhere. We didn't decide yesterday we were going to deploy these portals and these online loan applications, and all of a sudden we're here. But I think volume, what I have seen, Ron, is where our customers wanted to head in this direction. Some already were heading in this direction. Some of the hurdles of when should we do it, how fast should we do it, just quickly went away. Like when you had a branch closed, maybe there was still a step in the deposit account opening product where we made you walk in the branch and show your driver's license, even though there were plenty of identity solutions out there, and they got over that hurdle quickly. And so I think that there were stumbling blocks in the process that people had to get over quickly to keep doing business and serve their customers, that people did get over. And so, is that the end of digital transformation? Oh, I sure hope not, Ron. I think we've got a long way to go in things that we can do from an innovation and an adoption standpoint. But I just think there was an acceleration of some of the hurdles for some of these financial institutions that they forced themselves to get over.
Yeah, I think the people at MX may disagree with at least one of your points. I think it took them like a weekend to develop the portal that they put out. So yeah, it wasn't there yesterday and it was there today, but you make good points. Wade, do you want to jump in?
A lot of them used ours, Ron, and it was there for a while.
Any reactions to that, Wade? Do you want to jump into the fray there?
Yeah. Ron's lit up from the background, so I'm a little intimidated by some of his questions.
It's like we're in a chapel or something.
That's right.
It's
yeah.
a good point.
I think really what's changing is the consumer expectation, right? So if you think about when we started doing digital banking at Bantam in 2010, you had to walk into a physical branch in order to have that feature enabled on your DDA account. So the state diagram of how that workflow for the consumer changed is you were assumed the starting point was in a branch for all these ancillary services to be added on. And I think what we're seeing from a core modernization or core transformation, I think only Cornerstone would be able to give the entire list of the RFI for every single core feature. So a long list of things to redevelop there. But the impetus for that change is that the majority of consumers want to start that workflow on a digital channel. So, going from doing KYC, KYB of a individual because they walked into a branch and you have a video camera and they're, it's Wade, so he's 6'4" and maybe has a beard now. That's a much different process than Wade addressing a new banking relationship as an anonymous user from the internet. And I think as we change that start state from anonymous user may or may not have additional features and functionality with me, but my access pattern is through a browser versus through a branch. That's really what we're talking about in kind of this core modernization. I think the big three get a lot of mud thrown at them. If you want a branch banking operation, they do it extremely well. But the fringe is that 10 years ago, the minority of people came through that digital channel. And now maybe we're over 50%. Maybe it becomes the vast majority that only want a digital relationship in the future. But that's all being driven by a change in behavior of the consumer and how we service them.
Mm-hmm. It's an interesting point. And I'm seeing, by the way, we're getting some questions coming in, some really good ones. And just something to kind of go back to take a step back on Treasury, on the Treasury services point. There was a question that came in that was, requiring Treasury services may not fly with lenders, but you should see loan pricing differences with or without them, with or without Treasury. Do you agree? I do actually. I actually have some strategic planning clients, and we have some others at Cornerstone where it tends to be smaller banks that kind of started from the beginning, where the CEO really drove the discipline of we got to have the operating account, maybe not cash management, but at least the operating account to do the commercial loan. And they really, really it has a lot to do with C&I lending as opposed to CRE. If you're an all CRE type lending shop, going to the lenders, Ron, you're right. I mean, if you just done all real estate lending and then you demand that you have to get cash management, it's like, to quote the philosopher Rodney Dangerfield, it's like shooting pool with a rope. It's not going to work. So I totally get that. And so there's some other, I don't know if you guys had any other thoughts on whether or not you've seen, I don't know, Trisha, if you've seen, have bankers been able to get more value on the loan side? I mean, I've seen that, but I don't know if that's something that you've seen by kind of more forcing the Treasury hand, or at least being more disciplined about it.
I think that, right, there's overall customer profitability, and being able to look at the overall relationship profitability with or without Treasury services in different markets and stress test that. And that's probably deal by deal specific, but I think there's definitely reason for financial institutions, or what I hear from our financial institutions, to be looking at that overall relationship profitability, and Treasury services being a key piece of it. And then the operating account, there's obvious reasons beyond just profitability for the bank to want the operating account, whether that's just the need for the deposits themselves, or, I definitely hear a lot of chatter in our customer base these days around monitoring of balances and cash flow as a proactive measurement for credit risk, both on consumers as well as on small business and commercial accounts. So I think there's reasons beyond just the profitability there too.
It's a good discussion. I mean, it's interesting. We started with the mood. We're 20 minutes into this chat, and we're still on question number 1, which is fine by me, because there was something that I wanted to kind of get back to real quick on the mood side of it, which is just, how do you see that translating into spending? Wade, you mentioned they're really earnings focused, net interest income, it's non-interest income, et cetera. but are you hearing people that are more inclined, bankers that are more inclined to spend and partner on fintech, or less inclined, or is it about the same?
I think fintech is a huge opportunity for financial institutions, right? The last kind of 5 years, we weren't sure if they were friend or foe. Turns out, cheap deposits and non-interest income is a pretty attractive thing to most CFOs at a financial institution. So now it's, how do I manage that program? How do I manage that risk? How do I pick the right players to do that with? I think is a lot of that motivation, especially in the commercial banking space. If they can have a fintech practice for cheap deposits, creates a great opportunity on the lending side of things. Where we're seeing spending in financial institutions is, how do I, connect to fintech is one area. The second big area is, I don't think that there is going to be another, open solutions DNA, right? The rip and replace, we're going to replace every single thing and spend a couple $2 billion in order to reinvent this, and it's going to solve everyone's problems. What we're seeing is people using, technologies like MuleSoft, Confluent with Kafka, and really doing, core modernization. So, I've got 7 different ACH platforms. How do I route all those payments through one area? So I have one fraud solution, one review solution, one data warehouse solution. So kind of picking off those pieces and really creating more of an unbundling of the core banking solution. We predominantly work in top 25 banks. So maybe that's a little bit different than the average community bank out there, but lots of effort to decouple, have a centralized kind of way of being able to do that, and make it so that I'm not managing, 400 different point solutions, but how do I consolidate that down?
Trisha, what about you? What are you hearing in terms of, appetite for tech spend and fintech spend from banks? Is it about the same, or a little better, or a little diminished, or what do you think?
I mean, there were customers of ours who we were the reason they were able to work from home, and prior to the digital transformation that they did with us, their employees really struggled. And everyone wants to talk about digital as the customer engaging with the bank, but how about just the bank being able to work without taking like the credit files home with them, right? I mean, it wasn't that long ago that I was in financial institutions, and this still exists in certain places, where literally the credit guy has to put the box in his car to be able to do the annual review from home, right? And so digital transformation is not only a customer-facing, customer experience concept. And I think there's a lot of pieces to that where there is strong interest and demand continuing. And whether that's, portfolio management and being able to really monitor, a financial institution's portfolio and be able to do loan modifications when needed, and make sure that they've structured the right deal for their customer base in varying economic times, and COVID and gyms being shut down and restaurants being shut down, to, still looking at loan growth and being able to better understand what is the right loan price and how to make a deal profitable. Like, I just don't see those things going away from a bank perspective, at least from where I sit.
No more. I think my takeaway from that is no more credit files in trunks.
I mean, credit files in trunks seems a little 90s, but
80s, maybe even 70s. Let's go vintage all the way back. So that's an interesting. So I just want, you mentioned we were talking about some examples there of what you were talking about, some of the top 20 banks or whatever, and it seems like there's been between the big banks, some of the more traditional fintech companies, providers, vendors, whatever you want to call it, providers, and kind of more challenger type fintechs, where there had been kind of a morphing of the landscape. I mean, you had people like On Deck, with their big announced sale, who had been started out as a challenger, and then they've essentially became a provider for Chase and others. and you could say it as an enabler or provider, and then that didn't really pan out too much, and then they sold. We saw just in the last quarter, we saw Cabbage sell to American Express. And yet there's some other ones out there like Square, right? And then some others that are getting some real traction and people that are, some challengers that are getting charters. And I guess it's getting increasingly hard to tell the difference between a bank, a fintech, a challenger, just all these different categories. I mean, does it really matter? I mean, what do you see, Wade and Trisha, what do you see happening there in that morphing landscape? What does any of that have your eye or your attention?
Yeah, that's honestly why we made Moov. Their needs are drastically different than that of a branch banking network. It's really about unit economics. How do I decrease my cost per customer so I can open an account at $50, $100 and still be profitable? How do I do that at massive scale? Right? You take something. I was at Jack Henry 6 years ago, and one of our premier cores had 3,500 different DDA accounts. How many different DDA accounts does MoneyLion or Chime have? All those accounts were there because a customer requested them, right? So it's not a bad idea. It's a real use case. But to me, the challenger banks, what they've done well is they've carved off a segment that they could repeat at scale, the same process over and over, rather than trying to be, all things to everybody. One of the questions in chat here was, is omni-channel an outdated word? And I think, being on the corner of First and Main is a really hard competitive differentiator in 2020. Offer everything, and the only reason you get the business is you're the only option in town. The challenger banks, to me, are the ones that are doing omni-channel well, in the sense that they're getting a demographic that only has certain needs and finding that scale point to go after that customer. And unfortunately, they're carving off very profitable customers in order to make that happen. And we can argue back and forth whether or not Chime's supposed to be worth $14 billion or not. And, if we got a bunch of bankers here, we're all going to agree that that's insane. And if we have a bunch of technologists here, we're all going to agree that may be undervalued. So somebody put the money in, so it's probably worth something.
Follow the money.
I want to go back. I want to just ask Wade something. You just made the point that they're carving off profitable customers. Profitable maybe in terms of these are folks who are overdrawing on their accounts and the banks are losing overdraft revenue. But these are not necessarily prospectively profitable customers from a product growth and loan perspective. And, I literally just completed a survey, and I can tell you that, there are 24 million Americans who have an account with a challenger/digital bank. And when I publish the numbers, you'll see the individual numbers. I mean, Chime's got just an absolutely huge market share of the challenger bank market. It's absolutely ridiculous how much. But, here's the interesting thing is that of the 24 million Americans, 9, it's about a 2/3 to 1/3 split. 9 million of them, this is their secondary account. This is not their primary account. They're opening these accounts to either get better interest rates, better debit card rewards, better personal financial management tools. In another survey, I asked consumers, why did you open an account with one of these digital banks? Half of Chime customers said, because I just wanted to try them out. This is not real compelling growth story, Wade, that, I'm just going to trying you out. And the demographics of these consumers is so heavily skewed towards the low middle income. These are mostly consumers who don't have college degrees. The unemployment rate among the challenger bank customers is significantly higher than the unemployment rate among other consumers. So, this is why my belief is this is not worth $14 billion, because I don't see the growth opportunity. Now, I'll give Chime credit that their customers are. I didn't actually ask about satisfaction. I asked 2 questions. I said, how much do you like these companies that you do business with, and how much value do you get from them? And I do have to say that Chime's customers outscored everybody else, not just the challenger banks, outscored even the credit unions and the community banks on likability and value. So I do give them credit for that. But.
So I'll bite. I think this is, in my opinion, I think Square is a great example of an unserved marketplace in financial services, being able to quickly underwrite an SMB in order to accept credit card. That at that time, banks needed to have 3 months of bank statements, fax it in, underwrite your merchant acquire agreement, and make that happen. And so the tip of the spear for Square to serve SMBs was really making this, little cute Square dongle. And now look at where Square is now, right? I mean, they are everything Intuit ever wanted to be, plus some. So I think I totally agree with who Chime is today or who Moneyline is today. But we already know Moneyline's going to be offering business banking here inside of the next year. Those additional products and services compounded upon the customer sat scores that you're talking about right now have to be the long-term play. Otherwise, that valuation is totally impossible. So the question is, can a Chime, can a Moneyline, can an Acorns convert these really low customer acquisition costs and have this fantastic customer empathy through digital channels into additional products and services? And are we going to see that kind of become the rebundling of banking inside of that bigger brand, or not? And if it's not, right, they're not worth $14 billion. If it is, and they get to trade at 350 times earnings like Square, they're probably worth a heck of a lot more.
Really interesting. And it also seems like a lot of the, if you look, whether it was, Cabbage's process that American Express apparently likes so much, it seems like one of the things that many of these people are tackling behind the surface. We talk about UX and there's all the talk about customer experience, but it seems like way beyond the presentation layer of what something looks like. They figure out how to bring the data together and how to basically knock down the barriers, the walls between historic silos of data that you might find inside of a traditional bank that they really struggle with, whether it's the talent to drive it or the solutions or connecting them. And I'm seeing some questions come in from several people in the audience. I don't know if you guys are seeing those around core modernization and it strikes me that a lot of those questions, maybe the question behind the question, it seems like a lot of what's been discussed in kind of modern core, or whatever you want to talk about that, it seems to be around an ability for a bank to kind of take charge of their own data and knock down the walls to get things to work together. Maybe you guys would disagree with that, but I'm just wondering if you think about integration challenges that banks have versus someone like Square, Wade, who I'm sure has integration challenges of their own. They just may have more investor money or resources or expectations from their investors to tackle some of those things. Are the integration challenges pretty much, I was doing core conversions a long time ago as a banker and, plugging in my digital banking system with my core system and trying to figure out my data warehouse. And that was 25 years ago. Is it the same old problem? Or do we have a new set of challenges around integration that is driving some of this? You guys have any take on, is this a new thing?
Look, I think to your point on core conversion, that has always been a very difficult. Systems conversions are hard, and systems conversions are still hard. I think the integration problem has become more pronounced. I think as more and more companies realize the need for an open ecosystem of partners, and our customers, our financial institutions move to a best in breed and want to be able to connect different solutions. Nobody wants a swivel chair integration. where they have information here and they're turning around and typing it there. That need for integrations is definitely more pronounced. And I think modern technology and those of us who've built these systems in the last few years versus a couple decades ago have pretty much all built on a microservices concept, which allows for real-time connectivity in a different way. And so I think, that has changed the game, but a core conversion is still a core conversion. And I don't think that's gotten any easier. I think it's more the ongoing ecosystem of integrated products, where people built businesses around that. People realize that their software is more sticky with the more integrations that it has and the more value you can bring to your customer with that. People are willing to integrate, even if it requires a little co-opetition, as I call it.
Yeah. Wade, do you have any thoughts on that?
Yeah, I'll add on. Mark Forbes, my brother from another mother, asked a question in here on what is a modern core, and I think that lines up with what we're addressing here. To me, it's just this new access pattern, right? So the access pattern that was optimized for a branch banking core is walking up to a teller line and a line of people behind that, right? And you can't argue with somebody who had all the F commands memorized with the teller line system that wasn't faster on the green screen between that and a mouse. There's no question. Those people could just fly through that and they could just triage an entire line of people in the branch. But if you take the new access pattern that it's digital first, and you had said UX, UI earlier, and that's a really frustrating, those are not synonyms. One is a fashion statement, one is a experience. But if that access pattern has migrated from the branch to digital, now all of a sudden, what part of that is the core system? So typical core systems have access is really designed around a admin teller, right? It was never designed for the internet. There's no entitlements, rights, and permissions, which is like the fundamental building block of anything online. So now being able to have a new vendor that comes into your core, do they have to reinvent entitlements, rights, and permissions because they have access to everything? Now all of a sudden vendor due diligence is much higher. The barrier to entry is much higher. And so I think as we get to this modern disgusting word of banking as a service or open banking, it's really around how do we get access to this data? How do we do that in a way where new verticals can segment off some of the consumers in order to do interesting needs without affecting the rest of the consumers or creating more risk for the financial institution?
Hey, Ron, you have any thoughts on that? You're usually not this shy. What are you doing over there? You working on a report or something?
This is what happens when Ron gets around me. He gets real quiet real quick.
Yeah, no, I don't think so. Actually, what I was doing, to really be honest, was there's somebody from Chime who's listening in to this and giving me grief on Twitter for having just got burned by Wade. So I'm like, I have to defend myself on this one. Look, Wade just went. I actually agree with a lot of Wade was saying. I do think though that we have to watch the terminology because specifically with things like open banking, it just means so many different things. But the thing that I would say to your original question, Sam, is I do think there's something very different about today than 25 years ago. And this is simply 25 years ago, the nature of the integration was internal. And today, the nature of the integration is external. And you had plenty of political and cultural problems to deal with when you were doing stuff internally. It's, I think, even more compounded when you're trying to do it externally. And then you start getting into regulatory issues. So yeah, I do think it's a hell of a lot more complicated today than it was 25 years ago.
Well, here's one for you. So just as you guys think about whether it's banks or fintechs, providers, companies, who do you, when you think about the organizations out there that are most prepared for what's going on right now, and the challenges, to your point, Ron, they're way different now. They're external challenges. You have to be way more nimble. Who do you think is, not necessarily by name, but what types of institutions do you think are more prepared to survive and thrive right now versus not? Like, what are some things that jump out to you as if you go just kind of look at organizations and say, okay, these guys get it, they're going to be fine. Is there anything that jumps out at you as sort of a descriptor or something about them?
I think when you can ask a financial institution how they differentiate in the marketplace, and they can say, well, I serve this market super well. Mm-hmm. One of the examples I like to use is Incredible Bank, right? Before they transformed their brand to Incredible Bank, when they were just River Valley Bank, like they looked like the same community bank for everywhere, every place. Yet how they differentiate in the market is they are world-class, if not the best, at underwriting RV contracts. So taking that out of Wisconsin and taking it nationally and being able to really hone in on that very unique service is a great example of when you ask a financial institution how they differentiate. If we're all things to all people, now you're just competing on price. How are you differentiating and being able to answer that question well really matters.
It's our service. We have superior service.
We got the best coffee in our branches.
We fix our problems faster than everybody else.
Well, but I think the thing that you mentioned there, you're kind of getting to niche. Like, are there some, like, how do you define community? I think right now, I think the point is that probably 80% or more of community banks right now define community is by zip code or something, as opposed to by, we're focusing on veterinarians, or we're focusing on some niche in the market around a product or a type of business or something like that. And I know Trisha, in the lending side, like with what you all are doing in nCino, I know we spend a lot of time in our strategic planning sessions helping commercial lending shops get a handle on, are there some specific nooks and crannies of commercial lending that they can get into where they can tie treasury with it and just really own a slice of the market, as opposed to being, genericbank.com type of thing. I don't know if you got any thoughts on that, but.
Yeah, I mean, certainly see that. I mean, you even see certain community banks be organized instead of by commercial, small business, and consumer and mortgage, be organized by storage units versus veterinarians, and people who work in those verticals actually have experience in those verticals. And when they go out and they talk to a veterinarian, they understand how a veterinarian makes money or doesn't make money. And so, I mean, certainly I see that happening. I see banks, so there's specialty, there's organizing by niche, and then there's organizing by customer, right? Like one of the things, and I'm not just talking about like some far off universal banker concept, but if I'm a relationship manager and Sam, I'm having conversations with you about your business, and then you want to have a private wealth conversation, are you really going to bring in another guy? And what does that look like? And do I even have insights into that experience with you? And you've already shared all this information with me and banked with me for years, but I show up and I'm like, who are you, Sam? What do you need? Right. And so I do think that there are many more banks that are trying to specialize in niches and have that knowledge. I think there are plenty of institutions who are trying to focus on the customer experience and how do they maximize their interactions with you. And meaning not your business, this loan, this deposit account, but with you. And I think plenty of financial institutions that I talk to every day are making changes that are helping their business better serve their customers in that way.
Yeah, I like how you tied together, Wade, your point was about differentiation, and can you actually craft a narrative that is believable, that's different? And then what I like about what you're saying, Trisha, was you were talking about putting it into action. And like one of the things in consulting, this particularly around John Meyer, who's our Cornerstone's practice leader for business intelligence and data analytics, it's kind of like commercial lending was even 5 or 6 years ago, or in many cases now with the credit files in the trunk. You go into banks right now around data analytics, and it's pretty messy. And one of the things that's interesting to look for there, I found, is just, do they have 5 or 6 use cases? Like, are they just looking for data to pop up and grab them? Or do they have 5 or 6 use cases that tie back to how they're trying to be different? We're trying to be different in a certain way, like you mentioned, Wade, and this is how we want to be able to use data to create a different UX in some way, tying all those things together. And there's an alarming number of institutions, and I say this with no insult, because I've been around shops before and in banks as a banker where we didn't have great use cases yet. I've been there, but it seems like there's a lot of technology chasing a lack of definition around what we're trying to accomplish, which seems pretty straightforward to address. But I don't know that was a very good question I just framed up, but more of a statement. But I don't know if you guys have any thoughts or reactions to any of that noise.
But I guess I have one just from experience. We work a lot with the Square Capital team, and how they use data for doing underwriting is brilliant. And can't really get into everything, but taking everything from card swipes to payroll services to invoicing, they really have automated a way for underwriting lending that is very similar to what Silicon Valley Bank has done, from doing cash flow analysis and underwriting around that. And that's a critical way of being able to give a very large loan, based on data, to these SMBs that maybe would need some sort of asset-backed loan from a traditional community bank. Now these are cash flow-backed loans. And so seeing that as a tool that there's no loan committee, right? It's just algorithms, and they can run the algorithm against new data sets and see how the outcome would have happened. That's, to me, a wonderful user experience for that SMB. And so if we see
and a wonderful efficiency, Wade.
What's that?
And a wonderful efficiency for the FI, and take the bias out of the problem.
Yeah.
All those things.
And now it's a one-click offer, right? So it's, if you just want this line of credit extended to you, just click here inside of the thing that you interact with on a daily basis. So, I think the where you were going was, are we still talking about data and not getting any results, right? The future's here, it's just unevenly distributed.
Right.
And so it's happening, and it's brilliant. The team we work with at Goldman Sachs is doing brilliant things around data analytics and forecasting around cash flows. But, cash flow based lending isn't a typical type of loan that most financial institutions want to do. They want to do an asset based loan.
Just to jump in a second, Sam, I think Trisha and Wade are spot on. And I go back again to the cultural differences. You think about what Square and Goldman Sachs are doing. Yeah, they're making great use about data, but we just surveyed a bunch of financial institutions about their credit modeling process. And the percentage that manually review their auto decision loans is just absolutely sky high. It's like, why bother to do auto decisioning if you're going to go manually review? Like, I'm guessing Square and Goldman don't do that. And it's a totally different, culture and approach to the process, where you trust the data, you trust the processes because you built it up over time. And I'm sure the banks will have their defense for why they do what they do. But, I really think it goes to show how, even with the use case, there's differences in sort of the culture and just the underlying business processes and decisioning, mechanisms that they're using to put these through.
Yeah. And I was wondering, you bring up, some of the people like Goldman, and of course there's others out there in kind of disrupting the finance, the lending space and credit space. It was one of the questions that came in around embedded finance. Is there an emerging trend with embedded finance with businesses, or do you think it's a consumer banking trend only? Ron, normally I would go to our guests first, but you've been writing a little bit about embedded finance, haven't you? That seems like something I remember you talking about recently, but I don't know if that's something that you want to address at all.
Yeah. So just quickly, because the question was more from the business perspective than the consumer, and I think from a retail perspective, there's real proof of the trends. The business side, I am kind of optimistic and bullish that we'll see a lot of that, and I think from companies like Square and Gusto, who create platforms to kind of enable that. And I can really see small businesses wanting to support other small businesses and do their lending and borrowing and get insurance and things like that through those platforms. So I do think it's, typical here. We always kind of find that the retail world kind of leads the small business, which leads the big corporate. So similar pattern here with embedded finance.
Yeah, I don't know, Wade or Trisha, if you had any reactions to that. We can move on to some other questions. It's completely up to you if you had any thoughts there.
No, I think, look, the more tools a financial institution can help give their customer base and the more ways for them to engage, probably the better for both parties.
Mm-hmm. Yeah, I was thinking there's another question that's come in here, and I know talent has been a big, just whether it's talent that you're able to attract. I've seen my LinkedIn feed has just been chock full of industry providers looking for it looks like entire digital marketing teams, certain types of talent, development talent, et cetera, right now.
Who, me?
What's that?
Was it me?
Could have been. Maybe that's where it all came from. Could have been you, Trisha. I just, because Tom McGill here asked, how do community banks build out the correct staff and skill sets to be able to navigate the fintech space? And I was just going to say, well, we can talk about community banks. We can also talk about, your companies. What challenges are going on with building out the right staff and the right teams and skill sets right now, whether it's at your organizations or if you think about whether it's your partners, your clients in banks. Is it the same type of people? Are we all just looking for data scientists and digital marketing people and dev? I mean, is that what is the whole world's looking for the same people, or are there some unique challenges here?
I mean, I'm not going to minimize skill sets and backgrounds, but I'm going to give an example of why, if you want top talent, it comes down to culture and investing in your people and not an exact resume and an exact degree. I'm proud to think that we have a pretty well adopted and well received product that our customers, I mean, you hear it more directly than I do, Sam and Ron, but pretty appreciate. And so on my team, Dory Weiss, who's our VP of engineering, she came from an English background. She was working at University of Texas as a professor, left that and went to a Learn to Code program there. Moved to Wilmington because her now wife was in a creative writing program here. And we found her working from home still for the university coding. And she came here and has grown with us and is our VP of engineering over, however many hundreds of developers are on that team at this point. And I say that because obviously Dory had a technical aptitude or she wouldn't be able to do what she does. But when you think about a head of engineering, education and mentorship and onboarding of new people is equally as important to technical skill sets. And so I do think there is a war for talent. There will always be a war for top talent. And to build a great team comes down to culture and teamwork and respect and having a winning attitude. And sometimes it does require, rather than just worrying about a data scientist. I was a math major coming out of college, had no development experience, and began COBOL programming on the mainframe. I'll date myself a little bit. But you can learn these things if you have the right aptitude and attitude. And I think it's important for all institutions today in the war for talent to look outside the box a little bit.
Wade, any thoughts on talent and getting the right people, whether it's on your teams or on banks?
I totally agree with Trisha, but I think we have a moment of rebalancing of talent right now. The pandemic has created a unique opportunity in hiring. You've got certain industries that are on hiring freezes, which makes individuals nervous about their future. We just have the unemployment rate again. I think it's going to have again and again and again, all the way up through the end of the year. We'll be back in a full employment spot, call it January, February time period. So we are very consciously, aggressively hiring at this moment as there's a little bit of turmoil, fully focused on people that are happy to work remotely. And I think that has a window of opportunity, right? And then some of the more traditional benefits and strategy planning, come in sometime next year. But huge opportunity right now to get the best of the best onto your team.
Well, good stuff, you guys. So this is Ron and my show here. So we get to ask a closing question, and in the last few minutes that we have here, I want to go around the horn here. So you guys may recall the late James Lipton, who was the head of the Actors Studio, and he used to ask every person that was on his show what their favorite curse word was. So good news, I'm not going to ask you what your favorite curse word is, although maybe we'll do that in the future. I was actually going to go the opposite way. What is your least favorite buzzword? Like, what is a buzzword that you're hearing? It's like one of the questions that's coming in. Why do bank leaders continue to use broken or misleading data points? I don't know. Maybe buzzwords are the reason why. But what is a buzzword that you think should die a violent death in the industry right now because it's either misleading or annoying or otherwise not helpful? Trisha, you have a least favorite buzzword that needs to go away?
Oh, I don't know. I just ignore most of those things. But I will say, like in sort of joking, obviously, I, from my earlier comments, think building an open architecture and connectivity to an ecosystem is incredibly important. And so APIs are obviously an important part of that. But I swear, every time I look on LinkedIn or a marketing campaign, it's like APIs, or how many APIs do you have? And my question back is always like, what is the business processes and the systems we're trying to connect? And I do think it's a little overused and overthought about right now. It's just a technology and a how you do something, not the what you do.
Excellent. Wade, least favorite buzzword?
I freaking hate the term open banking. That is that's like big data, cloud, mobile first. That is a total garbage word. And
garbage word.
It's PSD2 really created that word. I think the United States is trying to keep it so they aren't regulated under a PSD2 mandate, which we should all hope for. But that terminology means absolutely nothing and everything. And so when I hear I have an open banking strategy, I try and hold the puke out of the back of my throat for a little bit.
Excellent. Very, very vivid. I don't know, back to something that Scott Mills had asked. Scott, who was on our last session, asked it. Mine would be omni-channel. That one's got to go in the worst hits record. Ron, I don't know if you have one.
I'm on the verge of getting violent if I hear new normal again.
Right. So no more new normal. And so I realize we're coming up on time here. There's going to be a little bit of a poll here. I want to say thanks to you guys, Trisha and Wade, and from Ron and I both. And I also want to say a shout out to the creators, like this guy right here, Eddie Van Halen. Love that guy. Shout out to him, and appreciate all you guys out in fintech land who are creating, whether you're writing code or building companies. And appreciate it. And Ron, Wade, Trisha, any other closing thoughts before we let our folks go off to their merry days?
Can't wait till I see all of you in person again.
Just happy that I could keep Ron speechless today.
And well lit. He also has excellent lighting. And so with that, everyone, we'll see you on the next FinTech Hustle.